Alright, good afternoon everyone. Today is Thursday, November 15th, 2012. Let's start right out with the results. On the 10,000 contract this morning, the ES, we lost 3 trades. So we got hit a little bit on the 10,000 contract. It's really unusual for us to lose 3 trades in a row on the ES, but we did. So we're down 24 ticks on the ES. We almost made it up on the crude oil. We were up 19 ticks on the crude oil, and we were up a couple of ticks on the NQ. We're flat on gold. If we had 5 more minutes to the live trading room this morning, we would have been green on the morning in the live trading room. But that said, let me mention a couple other things. If you're on the free trial and you want to get into our partners meeting tonight, you should have something in your inbox with the information you need to become a partner. If you are interested, then just respond to it. If you don't have it in your inbox and you want to know what it takes to become a partner, send us a quick email at support@cfrn.net. That's support@cfrn.net. All right, just put partner info in the subject, and we'll get that off to you as soon as possible. All right. If you are a partner, there's a partners meeting tonight, 9 p.m. every Thursday night, 9 p.m. Eastern time. We have some things that people have sent me and requested we go over, so I'll be doing that tonight. All right, and of course anything else you guys come up with while we're in there. If you have not taken a free trial with us and you want to take a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you get 5 days in our live trading room. You get all the indicators and everything you see here. You will be sent an email with instructions on how to download everything, how to download the charting platform, how to download everything you need to get right up to speed with us. Okay. If you have any troubles with any of that, of course, just send an email to support@cfrn.net or give Bert and or Leslie a call at 866-928-3310. Again, that number is 866-928-3310. Bert and Leslie, our brokers at Daniels Trading. All right. All right, trades. I gave you the results already. We started right off with the results. Let's go back to those trades and we'll take a look at them. Some strange things happened this morning. You see these things. Hang on, I gotta fix this thing. That's just too thick for me. But this is how you do it, Howard. You do this. Okay. Typically, when we get a pullback to the BBC, the window of opportunity, which is the space between the BBC and the MA1, will always get filled. Okay, typically. Well, I mean, it eventually always gets filled anyway. That space eventually minimizes until they cross. But usually, what you're going to see is when it hits the BBC, it's going to go down at least to the MA1, okay, or up to the MA1. In this case this morning, something happened right in here, and we were run over on the downside, and something happened right in here, and we're run over on the upside, and we gave it one more try over here, and it stopped us out to the tick, went up here, it would have given a little bit of profit potential, and then it came back down. From there, if you ignored the weekly trading zone, there was an opportunity to short right in here at the zone, and another one right over here, both of which would have given profit. Okay. That was our morning on the ES. Okay, 1, 2, 3, right in a row like that. By 10:30, we had 3 down trades on the ES. We made it back in other markets. Well, just about made it back in other markets. What I did want to show you, not the soybeans. What I did want to show you was the ES on the 4-tick range. Okay. Because if you treat the ES on the 4-tick range the same way that you treat every other market on the 4-tick range, it provides the same opportunity. Okay, we had the bullish cross. It tested the BBC with the up close right here, and that gave a nice move up. Now that move up right there would have, well, let's just look at it. 53 up to 58.5. If you got half of that, that would have taken care of half of the other stuff that didn't work out today. Let's see, we had another opportunity right in here for a couple more points, over here for a couple more points, here for a couple more points, here for a couple points, here for a couple points. all that on the 4-tick range. Okay, so there was plenty of opportunity there on the 4-tick range. I have the 10,000 contract up there because we've had it for a very long time, and some people like to look at the bigger time frames, the smaller time frames. If the larger time frames just aren't pulling it all together at the right time for you, then maybe it's time to look at the smaller time frames. Okay, just even if it's only for a little while. Let me show you the crude oil. Okay, because we took trades on the crude, and I will show you what we did. Okay, right in here, let's see. Crude had a bunch of opportunity. Crude inventories came out this morning. I wasn't watching it too closely this morning until right in here. Okay, you see I drew these trend lines up as price approached the BBC. I drew the trend line up. We were looking for a close down below the trend line. You get that close and it goes down. Over here we had the same thing on the other side. Now I'll say that a little slower for you. I'm looking for a trend line as price approaches the BBC. Okay, price comes down, hits the BBC, we have bullish divergence, then we just need an up close. Alright, so we get the up close right here, and it moves up nicely. Now, what if it went right through the BBC, or what if we didn't have any divergence? Well, then you can just use the trend line. Okay, the trend line by itself. We did happen to have divergence on. Oh, we didn't have. Yeah, we didn't have divergence on this one. I shorted over here on this move down right here. I'll move this out of the way a little bit. This was the trend line I had drawn. This was the down close right here, so I shorted right there. We actually did have divergence down there, but we hadn't tested the BBC yet. You could have done this two ways. You could have just shorted it right here like I did on the close down below this trend line, continuing the trend, or waited for the pullback to the BBC and the down close. I shorted right here. I had to endure the drawdown a little bit, but I took some nice profit on that trade. And I took nice profit on this trade. I lost 6 or 7 ticks on this trade right here when it zipped right through the YBR. I believe those were the only trades that I took on the crude this morning, but there was a bunch of opportunity. I mean, you can see right in here. Look at this big move down. Now, how could you have gotten into this, you might ask? Well, let's blow it up a little. And we'll look at one spot. All right, you have your bearish cross. Price pulls back up, tests the BBC, and gives a down close. Right here on this down close, you also have bearish divergence down here. All right, so you could have done that, taken it on the down close with the bearish divergence. The other alternative was to take it on the close below this trend line. Okay, you could have taken it there or even up here. Okay, and that would have had the same effect. You could have gotten into this big move down based on that. I'm sure this was moving pretty quickly in here, but there was another opportunity right in here as it approached. And I know this doesn't look like much, but when it's trading live, you can actually see these things coming together. And as it approached the BBC, now it closed down below that trend line, and you had this big divergence with all that momentum. You could have gotten in there again to capture some of it. All right, you could have gotten in there, and there, and there, and over here the trend lines start to get a little off. Okay, would have been like that. You would have been looking to get in right in here. Okay, there would have been a little drawdown on that one, but you could have done it. Okay, that's what we're looking at. I mean, right here, as we approach the YBR, we're not coming off a lower swing, but as we approach the YBR, that's the trend line right there. Okay, you see we've gone through the BBC, and now this black line is crossed up above the BBC, so we're going to start looking the other way now. So we'll take that trend line off, and we'll start looking the other way. If price starts to draw down this way, we'll start drawing down from that. You see how the MA1 is crossing the BBC? Now we're looking for an opportunity to get long. Okay? It really is that simple. I know that probably sounds like a lot and looks like a lot, but once once you've done it for a while, it's not that difficult. I mean, I was drawing all these in here on the Russell this morning, showing all the different opportunities that were on the Russell. All right, I didn't have a Russell DOM open. All my DOMs were occupied. But that was it on the Russell. And right now you see we're getting across here and across there, so we're likely to start moving, or start looking up. We'd be drawing trend lines going this way instead. You see? Like that. Alright, I didn't take Russell trades this morning. I did take some gold trades. I took a couple. One loss and one win. Let's see. There's the win, and the loss was pretty early on. Yeesh. There's the loss right in here. Alright, I shorted right over here. Right in here on the down close below the trend line. And it stopped me out right up here, pretty much to the tick. And then it totally tanked. You can see there was a lot more of this going on in here. When this move right here happened, this big move down right here, in just a couple of minutes, I was long on the ES at that time. I'm not sure what it was that made gold do that, but whatever it was, it had a big effect on all the markets because they all tanked at the same time right there. Now over here on the long side, we had a bullish cross, a pullback test of the BBC with bullish divergence. Okay. Oops. With bullish divergence in the up close. So you could have gotten long right here on the up close, or in addition to that, you could have just been looking at the trend line and waiting for the up close above that. All right. Over here, there was a bunch of chop in here, no opportunity. Over here, we pulled back up, tested the BBC, and had a down close with bearish divergence. All right. And when I say divergence, I mean the green line is moving away from the cycle. All right. There was divergence in here, divergence here, divergence here. But we test the BBC and we have a down close. So right in there was an opportunity to short on that one. Okay, right in there. And this right here was, this down close over here would have been the spot below the trend line if you were trading that way. Okay. So, we're doing the same exact thing across all these 4-tick range charts. We're doing the same exact setups, the same exact thing all the time, all across all the markets. All right. Once you figure out what it is that we're doing and what it is that we're looking at, it's not that difficult anymore. Okay, it may look overwhelming to some folks, but right in here we had a pullback up, test of the BBC, we had bearish divergence, down closes where I shorted. So I shorted it right there. I took some profit over here. It's really as simple as that. In here we had a bullish cross, a test of the BBC with an up close with bullish divergence. You could have gone long right in here for a little bit of profit. Where are we right now? We got to be getting pretty close to the break in here. You see I had drawn in some trend lines over here, but we didn't get an up close above the trend line. It went down below and we didn't get a down close. It moved back up. I drew in this trend line. We didn't get an up close until everything moved below the BBC. This one over here, finally, we got a down close right here with bearish divergence. So you could have shorted right here for the move down. Could have shorted again right here for this move down. Again right here for that move down. Okay. You could have gone long right here on this up close for the move up. You could have waited for the close above the trend line for the move up. These are all things that are taught to everyone that's in the live trading room in the morning. All right. I could go on and on to all the different markets and show all the same things over and over and over again, but ideally what you want to take away from this is that we're doing the same thing, the same setup, the same indicators across all these markets. All right. We do things a little bit different across all the 4-tick range markets. We do the same exact thing. Okay, we do things just a little bit differently on these volume charts that we have here. In these, we don't wait for the up close or the down close, the confirmation bar. Okay, we just take it off the BBC. But everything else pretty much the same. Okay. Let's see. I want to go through and make sure we answered all the questions in here. Some of those are not for me. Okay. I think I got all the questions. All right. If anybody has any questions, you can email them. Any questions for me that I haven't answered or that you come up with later, you can email them to support@cfrn.net. All right. If you are on the free trial and you want to become a partner, give me a call. You should have my email. It's in one of the emails that I sent to you. At least one of the emails that I sent to you. If you don't have the emails, just, again, send us an email at support@cfrn.net. All right? That's it, guys. I'm going to wrap up the recording right here. And